following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 28th, magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. Hope you're having a great day. Let's make sure we have an extraordinary day. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. We're going to go figure out what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon, East Coast time. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Internationally, 727-445-1044. Of course, you can email me, Steve at TFNN.com. Inside the Tiger's Den, instant message would work as well. So we do have some emails that have already come in. So let's go get this show started on this magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow traded up 45 points. She's traded at 17,561. S&P up 444. That's trading out at 2040. A lot of fours out there. NASDAQ Composite up about 4 points, trading at 47.77. Somebody ring the cash register out there. You've got the Russell 2000 up $3.60, trading at 1083. Gold is back $3 right now, trading at 1218. Headed lower. You've got silver, that's off about 2 pennies, so we've got a flat market out here, trading at 15.18. She too is headed lower. Platinum's down $8. I don't know, I haven't really paid much attention to platinum. Silver is off 21 cents, trading at 39.25. You've got the leaders to the upside out here, dollar-wise. You've got Alder Biopharmaceutical, that's up $8. That's up 47%. They've clearly cured something. Tesla Motors is number 2 to the upside. It's up $6.55. That is up about nearly 3%. Chipotle up 1.5%, up $6. Cal-Maine Foods up nearly 10%. That's up nearly $5. To the downside, Priceline off $25, down nearly 2% out here. NetEase, NTES, that's down a little over 3%, off about $5. Perigo Company down about 3%, off nearly $4 out there. So plenty for us to go ahead and take a look at. Let's first begin by taking a look at, so the first question, during Larry Pesavento's show, I was able to listen in today. Most days I just don't have the opportunity to listen into all the shows, but just happened to catch a portion where Larry was talking about gold. And he started talking about it in terms of other currency pairs. And you know that's one of the charts we take a look at. You and I, we take a look at that from time to time. So let's get a feel first. Where are we at with regard to gold? Let's first take a look at the gold contract. Now, those of you that listen to the show normally, regularly, you know that we take a look at a handful of patterns that work on all time frames, all charts. Doesn't matter whether it's a commodity, whether it's an ETF, whether it's a futures contract. And one of those patterns happens to be when price moves higher or lower, does with less relative strength or does it with less relative weakness out here. Now, in the case of Goldilocks out here, when gold formed a bottom, that bottom coming on December 3rd, it was making that pattern out here. As gold moved higher, nicely moved higher, well, here in the trading session of March 11th, it was also doing the same thing. The same pattern at the bottom is now the same thing that formed at the top. Now, however, at the top out here, as we do our wave counts out there, we know that when we get to wave number 7, you've got to pay very close attention out here. So you've got two patterns that say, hey, guess what? Gold is done moving higher. It's going to pull back. How far is it going to pull back? We'll take a look at those. We'll take a look at some different areas. We also know with regard to our levels of horizontal support and resistance out here, we've got price trading below our TAS market profile on a daily basis. So that's the setup. Same message that formed at bottom, formed a top out here. Is gold going to move lower? Absolutely. It's going to. Can I control it? No. But the patterns are the patterns. You and I, we just simply trade what it is that we see out here. So let's go from that chart and take a look at gold priced in multiple currencies out here. I've got several of them. The first ones that we'll go ahead and take a look at, the top portion of this chart, and this is delayed by about 15 minutes out here. But the top portion of this chart is gold priced in euros. If you were over in Euro land, if you're over in Europe right now, not the UK, but if you're over in Europe right now, in order to buy an ounce of gold, who's that? William Devane. He's doing the commercials over there, but he's not telling you about gold priced in dollars. He's telling you about gold priced in euros. And he would say it's going to cost you 1,087.90 euros in order to buy an ounce of gold, versus here inside the U.S., it's going to cost you 1,217. Does that really matter? No. What matters to you and I are taking a look at the different patterns out here. And if we take a look at Goldilocks off of the lows out here, this is coming back to the trading day of December 31st. Now, we know that there was a bottom that was actually formed on December 3rd. Yeah, it was December 3rd where we saw the real low on that chart that you and I just took a look at. But if we take a look at the gold here, priced in euros, the top portion of my chart, we can see right now it's pulled right back to a very important level of support. Look, people in the U.S. are not the only ones trading gold out here. So traders around the world, especially those in Europe, they're taking a look at those that trade trend lines. They're taking a look at this trend line and saying, if this thing breaks this trend, they probably start to begin to pile on to the downside. So this is an important chart. Now, it's not just gold priced in euros that we can look at. You and I can go take a look at other currencies. So let's do that. Let's take a look at gold priced in. Now, when it comes to mining, the mining that is out there, I believe, if I'm not mistaken, somebody can look this up for me, I believe the largest producer of gold is China. I believe it's China out here. Let's take a look at gold priced in the renminbi or the Chinese yuan out here. And that happens to now be the bottom portion of my chart. Let's go ahead and turn up. Well, we'll leave these out. I'll unclutter them in a moment. But the bottom portion of my chart, that happens to be gold priced in yuan. Now, what we can see here is gold priced in Chinese yuan broke through that trend line back here on March 23rd. You got some small-bodied candles out here, but it continues to trade below that trend line. Let's go ahead and turn that one off. Let's go ahead and take a look. How about Australian dollars, right? We know that gold, as far as, I don't know if China's number one and if it's Australia, they're the top 5, I believe, right? You got China, you've got Australia, you've got South Africa, you've got the United States, you got Canada, most likely. But if we take a look at the Australian dollar, now that's the bottom portion of my chart out here. It should be the bottom portion. No, that's... you know what? That's not Australian dollars. Sorry about that. Let's put up the one that's in Australian dollars. There we go. Now here, if we take a look at the Aussie dollar and gold, right now it would take you 1,615 Aussie dollars in order to buy an ounce of gold. Take a look at this trend line, which was broken back here on March the 7th. Does that mean it's going to move lower? Look, it's important to take a look. Traders in Australia, they're looking at gold priced in Australian dollars out there. We've got to go to a break. But you sort of get the picture. I'd say the euro, gold price in euro, is probably the one that's going to give you the next big piece of information with regard to its move. Where it's headed to? Well, it's headed down to, come on, populate on my screen. We're just going to have to wait till we get back from this break. 11:63. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Just before we went to that break, I was able to squeak it out, which is 1163. That really becomes the next target to the downside. Not necessarily the final target, but the next target to the downside when, not until last night's lows at 8:30, I believe it was. At 8, we'll go take that look at that. At 8:30, get taken out. Now, why do I say that? If we take a look at the daily chart out here for gold, you're going to see that price was coming right back to the TAS market profile weekly point of control out there. So I knew, you knew that this was going to be a fairly decent level of support out here, 1203. If you take, so if you're an intraday trader, short-term trader, you would have been paying attention to that level. You've also got A to B equals CD to the downside that was completing. But you would have also been paying attention to that 30-minute chart here for gold. And off of its last move, the C to D leg, basically, of an A to B equals CD to the downside. This is coming off of the high from 4 o'clock in the morning back on March 22nd. You can see if we do, well, actually, the wave count that we're taking a look at, that I'm looking at, started back here at 8:30 in the evening on March 22nd. So price moves lower, does with less relative weakness out there, makes a seventh wave to the downside out here. So it had everything to say, hey, that's going to be a level of support, which it still is. And until it gets taken out, by the way, the price point to be watching there is 1206. You start breaking below that, I don't know where gold will be priced in euros. You know, we have to come back and take a look at that chart. But in the U.S., that ought to get things moving to the downside. So below 1206, below this 1203 area, momentum starts moving to the downside. Then the next area of support that one would anticipate is going to be 1162. When price gets down there, then we'll go take a look at the charts to get a feel for what other patterns might be forming. So that's taking a look at gold in multiple currencies, taking a look at it in the U.S. currencies, take a look at intraday timeframes out there, just simply to help us get our mind wrapped around with regard to where it's going, what it's doing, why it's doing it, and so forth. Now, when we take a look at those seventh wave moves and so forth, and we were taking a look at a 30-minute chart out here, let's take a look at the weak link in the markets. Let's look at the Russell 2000. You cannot argue that the Russell 2000 is not weaker than most of the other, and in fact, all of the other indices out there. And if we take a look at a 30-minute chart here, this is the Russell 2000 future contract, and we start doing our wave counts. Let me see, where do we begin this one at? Right here on the trading day of April. What was it, April? Hey, March 23rd out here. We start doing our counts to the downside. You get to number 7 out here at 10 o'clock in the morning. This was on Friday, March 24th. What's it do? Makes a nice little bottom. What's it do last night? It moves all the way up. You've got a little price relative strength divergent pattern, but really that pattern in essence failed at 4 a.m. But when it failed at 4 a.m. by 4:30, you had one of those confirmed seventh wave moves to the upside. So see, these patterns, they work on all instruments. We're showing that to you, whether it's daily, whether it's 30-minute, whether it's 10-minute charts out there. You want to be paying attention to this. Now, what do we have take place here? So since then, you saw the market move lower into about, 11 o'clock, 11:30 here this morning. We see the bulls decided to show up right here at the, if you take a look at this market profile, pretty interesting. The point of control is really the same thing as the bottom of this box out here. That tells you that the real snipers, you got the entire line out here of bulls that are they're just saying, come on back, we're going to go ahead and run you over. And that's in essence what took place. The market has since then moved higher. Well, that was interesting. The market has since moved higher. Price is trading above its most recent 30-minute market profile. So 1076.70 is an important level of support. Now, there may be an A to B equals CD to the upside or to the downside out here inside the Russell 2000. Let's take this one step further. I'm going to switch over to a different chart. We'll turn over to my E-signal charts out here. Let's go take, and because, I can't tell you which one it is. Well, here's what we know. When we take a look at the retracements from the low of about 9:30 this morning, 9:30 on 9:30 on Thursday, not Friday, 9:30 on Thursday, all the way up to the high out here at 3:30, 4 o'clock in the morning this morning, I should say. Look at the retracement that was also done here today, when that point of control and that center of the box were lining right up at 1068. 1069, we'll call it. Look what else was going on at 1068. You had a nice point 618 retracement, so you got this nice little morning star reversal. It is possible that this is setting up an A to B equals CD to the upside. If it is, let's go take a look at what that level might be. Let's go ahead and put our tool on, but let's go ahead and get rid of that. Let's take a look at the larger potential. We'll look at both sides out here. Your A point, again, being the low on Thursday. Come on, work with me. There's your A point. Your B point out here at about 3:30 this morning. I grabbed the wrong darn thing. Let me do this. It's going to be easier, I think, if I turn the retracement, just simply get rid of it. So we'll take a look at, and we wanted to get rid of it anyway. So let's take a look at, again, the A to B equals CD, much easier now. That would give us a price, but that's if you see the 1082 area get taken out. 1082 is going to give you a price projection between 1090 to 1096, I would say, would be more likely the scenario if, in fact, by today's close, you see a move above that level. Now, can we rule out that this is not an A to B equals CD to the downside? I don't know. Let's go take a look at it. Let's go see what the likelihood would be. And we're just simply going to take a look at from last night's or this morning's high. I keep saying last night, but it's this morning, right at 4 o'clock in the morning. If we go from that high down to the low so far, you can see that price is now made a 0.786 retracement, 1079. So we're in a quiet market, just kind of moving sideways, things of that sort. It's a wide-ranging bar coming into that 0.786. It is not likely. Doesn't mean it can't happen. But the way that the market communicates to you and I is through these candlestick patterns out here. You come into a natural level of, let's say, resistance or support. In this case here, resistance. And you're doing the wide-ranging bar. It's basically saying it ain't over. It ain't over till it's over out there. But let's go take a look at if it is over, meaning the market just moves sideways, it's not able to get above that 1082 area out here. Well, there's the possibility of an A to B equals CD to the downside. And that would go ahead and give you a price projection. It would, there we go, of really, because you can see it's at 80%, really a little bit above that 0.786. But you would be looking at a move back down to the lows of Thursday out here, maybe between 1065 and 1061. Remember, the Russell 2000 is really the weak link out here. Now, how are we going to know, you and I, right? How are we going to know whether the Russell 2000 weakness or the strength is going to move these markets or help to establish moving these markets higher or lower? What you and I are going to go look at is, and I'm looking for it on my screen out here, where the Sam heck did I put it? Right here. Here's the number that I would say as of about 10 o'clock you want to be paying attention to inside the Russell 2000. 1084.40. Not to be exact or anything, but let's be exact. 1084.40 is the number you want to be watching. If you see the Russell 2000 close above that, and right now it's trading at 1080.295. If it closes above that, it's a very subtle message, but the subtle message is that the bulls are still in control of the game out here. So I say you want to be paying attention to what is the weak link communicating to you and I. So we get back from this break, we'll go take a look at some other things out here worth noting. Oh, one of the questions that came in was, Steve, can you explain to me why the VIX index is higher and the S&P is higher today? The answer is actually very simple. And thank you for the question. The reason why I say it's simple is because we know the VIX is priced at 1512. And if you take a look at all of the other futures contracts, the December one, by the way, that's right here at $21, you can see that you've got a fairly large contango, right? Where the futures contract, the options market is saying, hey, I don't believe this stuff. They're just simply coming closer together out here, right? The cash VIX index is simply trying to maybe realign itself with regard to the futures market out here. That's why it's moving higher as well as the market. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 31, S&P is up 3, NASDAQ Composite is flat at the moment. So just before we were going into that break, we were taking a look at the VIX index. Let's come back to that. So, can we? So we see the VIX index is trading. It's up by 41 cents, about 3%. But we can see the significant contango where the cash VIX index is so far away, percentage-wise, price-wise, really from the December, the November, the October, the September, the August, the July futures contracts. So those two things have to come together. And it's one of the reasons why you can have the market or the S&P trading higher or slightly higher, and the VIX index as well. That's got to get adjusted. Now, the bearish meaning on this would be, and I can make a bearish case, is if the VIX index closes above, this number's here as of about 10:30, about 1474, I believe was the number. If you close above that, it starts to lean you towards the case of being really cautious from a bullish side. Could be an early warning signal, or at least it would be telling you that the VIX index itself wants to move higher. The cash index wants to move higher out there. That would be my reading. If you see the NASDAQ Composite at day's end, we'll call that a close below 47.65 out here, which is right now support. It's been tested. It's been rejected. You see it close below that. That message would be, okay, lean more towards the bell. Bears, right now it's bullish. It's bullish to neutral. We're looking at a daily time frame, right? Daily time frames, 30-minute time frames, they all mean different things out here. I try to cover multiple time frames so that you understand the message of the markets. Hey, why did the market stop where it did this morning? Why did gold stop where it did earlier or late last night? Because if we're just pattern recognition traders, we know what patterns to be paying attention to. It just helps us to answer that question. If we see so you got the 1084, 40 level inside the Russell to be paying attention to. You close above that, that gets back in a bullish mode, cautiously bullish, but bullish nonetheless. 4390. Is the number inside of the NDX 100. As long as the NDX closes above that, it is not bearish. There's no question about that. Inside the S&P, the number you'd be looking at, again, as of about 10:30 this morning, inside the S&P 500, you're looking at a number of 2038 would be the magic number there. We're trading, I think, pretty much right on that level. So that's what's going on from a daily perspective, at least what Stevie is looking at, in order for the market to communicate to you and I as to what its next move wants to be out here. If I take a look at the advanced decline line inside the New York Stock Exchange, and NASDAQ Composite inside the New York Stock Exchange, now on Thursday, it dipped just below that level. Now, it's important. Right now, it's trading back above that area. In fact, on Wednesday and Thursday, it traded below that, but just slightly below that. It really says that the sellers or the bears really should have had the energy to continue, and maybe by the end of the day, it still is below that zero line. But if we're calling the market right here, right now, which is what I'm doing, the bears, the sellers, never really had any kind of oomph behind their move out there. If oomph is a technical word, and in fact, by getting back above the zero, tells you clearly that it is the bulls that are in charge of this game out here. Still, inside the NASDAQ Composite, really the same message. It's just slightly to the upside. It's just slightly back above the zero. You're looking at the very bottom indicator out here, but it's telling you that, hey, it is the buyers that are in control of this market. Same message inside the Dow. So all three of them, as we speak, at 1:34 in the afternoon, in the hands of the buyers. Now, unfortunately for you and I, this indicator that we are taking a look at is really an end of day indicator. So it doesn't mean a hill of beans, although it does mean something, but it doesn't really mean a lot to you and I at 1:34. It's how does it finish at the end of the day's session. So we've covered those indices. We've covered the VIX and why it's doing what it is. I don't see any other questions that are out here. Let's get a feel as to why the market is somewhat stalling where it is. Let's go see if we can figure that out, which I know that we can. Because we have the tools to do that, right? So if we take, that means we've got to go take a look at longer term, what is the market doing and why? So here's the S&P 500. What we want to take a look at are these horizontal levels of support and resistance. This happens to be the S&P that we're looking at. This happens to be a weekly chart of the S&P 500. You're going to see green, red, and blue horizontal lines on my screen out here. Let me go ahead and get my tool where I can turn those on and off at will. Let's do this. Sometimes easier for me to just look to my left to do that. Now, the blue lines on the screen out here happen to be our daily horizontal trading ranges. Now, you might say, what the heck is that, Steve-O? Look, Bud Rolfs is the one, well, he's the one that certainly I give credit to designing or creating these horizontal levels of support and resistance. And the way that it's done, this data here, by the way, that you and I are looking at, we can see up here in the upper left-hand corner of my chart, goes back to September 1st, 1994. So we've got a lot of data, 12 years, no, not 12, 94, 2004, 2022 years worth of data. I can do the math if you give me enough time out there. So you've got 22 years worth of data where we're taking a look at opens and closes, in this case here, daily opens and closes. I still have a weekly time frame chart up on my screen out here, but we're trying to identify where the largest point of contacts are. A daily open and a close of the candle session is going to be different than the weekly, which is going to be different than the monthly. In the case of Bud's work, you can imagine the work trying to do multiple time frames out here. And building a tool is a whole lot easier to do this. And that way you really understand where price is headed to. Now, in the case of taking a look at the daily, and they all work as levels of support and resistance. We want to pay attention. By the way, you might ask, where's the largest number of points of contact? It is down somewhere around, it's either 1107.80 to be exact. We've had during the last 22 years out here, we've had 81 opens or closes, in that price range. But now let's fast forward to where we're at today. And we can see here, let me try to expand this up. There we go. We can see that at 2058.32, I don't know. Let me see. What's the data box say? What was the high from last week? It was the high from last week, 2056.60. 2056.60 versus 2058.32. You understand why we use these as guidelines, right? But 2058.32, to give you exact, we've had 13 points of contact out here. If the ES Mini gets above this level, closes above this level, its message is not that it goes back to the highs, not that it can't do that, but the highs here from May of 2015, July of 2015, it says that price would want to go to the 2216 area. Now, that's the daily horizontal trading range. If I put the weekly up here, let's go ahead and add those to the chart. Well, what we can see is before the S&P can get to 2216, it's got to overcome the weekly horizontal trading range number of 2152. So I would be more inclined to say you get above 2058, you can easily go back and take out the highs from May and July of last year and get up to 2153. And oh, by the way, look, we are still in the favorable seasonal cycle. But until the S&P gets above this 2059 level, it could just simply chug sideways. It could pull back too, but it could chug sideways out here. The pulling back means we've got to take a look at those price levels below the numbers that I gave you, and those numbers change on a daily basis. Now, we can also go ahead and put our monthly horizontal trading range numbers out here, and we do that. That says, hey, this 2087 number, really, that's the number you want to really be watching. You get above 2059, then 2087 really becomes the next level to be paying attention to inside of the S&P 500. And those are our horizontal trading range boundary numbers. Steve Rhodes with TFNN.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You've got the Dow's up about 44 right now. The S&P is up 4 points. Let's go take a look at some individual equities that are moving inside the market, try to get a feel where they're headed to. Let's go take a look at the downside. Let's begin by taking a look at Priceline. PCLN is the ticker symbol. So here's what we know about Priceline. Number one, on Wednesday, you saw it close just slightly below its TAS market profile low out there. That was, by the way, priced or is still priced out at 1309.35. So resistance, in essence, becomes old support should become new resistance. 1309.35 is the number to look for. It does look like what Priceline is going to do is first, well, let's get the volume bars out here. Let's put those on now. Let's take a look at, so you had a huge breakout back on February 17th. Inside of Priceline, the volume there was 2.4 million shares. Today, you've done 229 million shares. You're not even 10% of that volume yet to the downside. So pretty good chance that what Priceline is going to do is going to gun for that breakout. Now, the question is it going to gun for the bottom of the low from the trading day of February 17th? That would be the low of the gap, or it's really price-wise, it's the high of the gap, but it's really the low of that session from where it gapped up on February 17th. I hope that made sense to you. It does if you're watching our screen out here, because it says that 12/20/15 is the level to be watching. It wouldn't be unusual at this case for a price to pull back to 1164, right in the center of that gap. And that may be what it's doing. That is the top of the weekly market profile, unless there's a new profile that forms out here. But at this stage, I would say pretty good chance that what Priceline is going to do is going to pull back to the 1220 to 1246 area before it releases any messages, any information to us. And as long as it's got volume of less than 2.4 million shares, it's just it's some type of retracement, some type of a light pullback into a level of where it broke out. That's what's going on inside of Priceline. If we take a look at NetEase, NTES is the ticker symbol, off about 3% down to $4 out here. Here's what we see in it right now. Today it is traveling right at, it is trading right at support. Support of both its weekly and its daily market profiles. Those are in the 140 area, 140.12 to be exact on the daily. You're at 140.02, so 10 cents underneath that level. What does that say? Well, what your IRs ought to do is come back here to this key reversal session. Here's your level. Here's your last swing point, which takes us to February 9th. The volume there was 1.1 million shares. You've been trading for 4 hours, and you've done 563,000 shares. So it's trading back towards that level. It hasn't tested it yet, but I would anticipate that if it closes below what we say 140.12, pretty darn good chance it's going to make its way down into either the 139 even Steven number, or if it closes inside that, 129.60, where it could form an A to B equals CD to the downside if it takes out 129.60 with more than 1 million shares, with more than 1.2 million shares, what we'll call it. That is on NetEase. Number 2, dollar-wise to the downside. Let's go take a look at Regeneron Pharmaceuticals, REGN. It's off about 1%, down $4, so not a big deal out here. But nonetheless, let's go see what it's trading into. It's one of the top 5 inside of the IBB, biotech sector, for the NASDAQ. And currently this is trading into its swing point from March 17th. Now that swing has got 1.5 million shares, and you're really into it with light volume. But if it closes below 369.50, and it's trading right now at 365.47, if it closes in there with light volume, odds favor a move down to the 358 to either the 348, 349 level out there. That is on Regeneron Pharmaceuticals. But boy, backing down with extremely light volume versus the last time that price was down at these levels. We've also got, let's see here, percentage-wise, you've got PJT Partners, but I have flashed on my screen. I think they've got some kind of SEC issues, so that thing we won't spend any time looking at that. Percentage-wise, really to the downside, yeah, you got Bailey Pharmaceuticals. They're going up in front of the hill, just to, in any event, they're trading to the downside. I hope nobody is inside of that. Wooba. I don't even know what Wooba is. 58.com is the name of the company, down about 5% off $2.73. I just liked saying Wooba. But let's go see where Wooba is perhaps headed to. It's trading right now down below today. That is below its TAS market profile daily bottom of that box at 54.47. Volume behind the move today, about 450,000 shares. Last time down into this area was, really light volume on the pullback today, about 884,000. So this is likely to test 5170 before it releases any more information to us. But if it breaks through that level, it probably heads down into the 44.96 area. So that's what, 3 or 4 stocks to the downside. Why don't we take a look at something here to the upside? Let's take a look at, what did these guys cure? Let's go figure it out. Alder Biopharma. What did they do here? It's surging on what? Let's go see what it's surging on. Phase 2B study of ALD 403 met both its primary and secondary efficiency endpoints. And hey, traders like that. In fact, a lot of traders like that. To be exact, 11 million shares have traded hands so far. It hasn't had volume like this. And, well, the last time it had volume like this was when they were partying up towards the highs out here on June 26th. So what has this, June 26th, by the way, of 2015? This has an all-time, well, I don't know if it's all-time, but it has within the past couple of years, its high has been up as much as 54.90. You're trading at 25.54. So let's go take a look at this. Good news here. Everybody is celebrating. And, it's to stop the descent, that is for sure, because from that $54 level, it got all the way down to about, what is that? That's a price point of $15.82. That's a lot of pain. if you stayed inside that equity. Now, today, good news out here. It's above horizontal levels of resistance. If we take a look at just simply the trend line, that would be the trend line coming off after that high of the last couple years, maybe the all-time high, I don't know. But if we just simply take a look at that trend line, you can see that so far that trend line is really impressive. Why? Because on a day like today with 11.1 million shares so far, and we're going to have more, that trend line has held as resistance. So the high today inside this equity is 27.79. If you can get above that, it will have broken its trend. But until then, the trend, even with this volume, is still in place. What does that say? That says if you can't break the trend line to the upside with that kind of volume, this thing might pull back into the gap, might pull back to the breakout area, which would be in the 1671 to 1798 type level. ALDR, by the way, is the ticker symbol. That is Alder or Elder Biopharmaceutical. We've got Chipotle. That's moving to the upside out here. It's up about $7 and 1.5%. Let's get a feel for what Chipotle might be doing. Is this thing turned bullish out here? Well, the answer to that question is no. Let me be more specific. No. If it trades above 480, about 484, we'll call it, and you're trading right now at 478. If you can get above 484, I can buy into it. If it gets above 494, another $10, then it'll be above its weekly task market profile. And then that says it's got a deeper run, a deeper retracement, a deeper upside move, which could easily take this equity into the, 535 would become a natural move, as well as 620.30. It's 0.618 retracement. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 50 points right now. S&P's up 5. NASDAQ Composite's up 3. Russell straight out of that 1084 number. Some change added to it, but that gets above 1085. It gets back into a bullish formation out here. So let's try to wrap this up here over the course of the next 4 minutes. What are we seeing? Let's take a look at the daily contracts for the futures indices out here. You can see in the case of the ES Mini, we can see that it continues to trade within its TAS box. It's trading right now at the point of control, the center of that box, which is slightly closer to the bottom of the box, giving a slight edge to the bulls. Look, the number is 203.25. You get above 2030.25. I'm not talking by 3 or 4 ticks or just, but let's say you get let's say today's high. We'll use today's high. You close at 2039.75 or higher. Then what you may have forming out here is native B equals CD to the upside inside of the ES Mini. Why can we say that? Well, that's a really important number for us to be paying attention to. Here's what we know from the low at 9:30 on Thursday to the high out here at 4 o'clock in the morning, 2039.75. What we had today was a retracement, a 0.68 retracement. So that could easily be our just simply a natural retracement of an A to B equals CD leg that if you get above the high from last night, I think that's what the message is. And if we do see that, then we're looking at an A to B equals CD pattern. Let's take a look at it. That's going to actually give you a price projection of exactly 2049. And depending on the kind of move that takes place in the overnight hours, that's assuming that this were to occur, maybe even 2056 out here. So that's what's going on in the ES Mini. However, we know that if we take a look at that daily contract, we go back there, it's really important that it holds on a daily basis the low. The bottom of that box. So 2021 and a quarter out there becomes a really important low to hold inside of the ES Mini. If you look at the other daily contracts out here, the NASDAQ, the NQ from a daily perspective, setup is bullish, just as really the ES is, right? You've got these daily profiles, each forming above the prior profile. We haven't seen a breach of the bottom of those boxes out here. Inside the NQ, it becomes pretty easy. Any close about 44.19, that's going to suggest, that's going to give you a message that it wants to move higher. The rest of the markets will follow suit. Inside of the Dow futures contract, the key number to be watching is 17,554. To the downside, by the way, is 17,341 inside of the Dow. And the Russell 2000, it gets above that number that we were looking at in the cash indice at the 1084, says that the futures contract probably stalls at around 1099 and a little bit of a change out there. So that's really the overview as to where we're at. Market call here from a daily perspective, it is bullish to neutral at the moment. These key levels of support as of 157 haven't failed. They haven't failed in the Wilshire 5000. They're trading right on the number, right on the button as we speak inside of the New York Stock Exchange. So just the Russell 2000, and it's also trading right on the number that could act as some support out there. Hey, in that VIX index, boy, you get below 1473, today, and it's just another. The message is clear from a daily perspective. You just simply get back to the bullish case. You still have that contango, which at some point here is going to be reconciled, but it just may not be today as the day when we start off. So, folks, thanks so much for being here on Magnificent, Marvelous, Magical Monday. And it is magical because following me is the one and only, our polar bear, Mr. David White. And following David, you've got the Tom O'Brien Show from 3 to 5. So have a terrific, you have a terrific Tuesday, but have a magical and marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.